Um, Guys, we're going to have some fun. Good morning, Miss Adriana. Nice to see you. Um, Guys, so what today is going to be, and I know a lot of you are excited for John Novak to be in here. And story of my life, everybody wants to see my brother instead of me. I'm used to it by now. Doesn't hurt my feelings anymore. But we're going to do a 101 class first, guys. We're going to go after those very basic trades, laying the foundation for brand new users. And guys, a lot of what we talk about in this first hour, you're going to see, you're going to hear from John Novak in the second half. So if you are new, please stick with me, guys. And then in that second hour, John Novak's going to come in. He's going to crank up that live, that auto trader. And I'm going to tell you right now, from what I've learned from him, the lessons that he gives on small chart management are going to be amazing. He will be, Wayne. He's going to be running the auto system that provides those amazing entries. And then he's going to be doing a lot of small chart management and just really throwing out unbelievable knowledge for you guys. It's going to be awesome. I'm not going anywhere. I'm going to sit and watch too because I firmly believe that there is no cap to what you can learn. There is no I know it all kind of moment in trading, guys. There's always an opportunity to get better. So I'm going to go through my spiel so I can clear the stage for John. And my day starts every day with checking news. And one of the things that I noticed is that there are no high impact events, guys. I check U.S. news. I don't worry too much about what's going on in other countries because I trade U.S. markets. If you are trading a market that could be affected by something outside of the U.S., always check it. But I'm looking for these high impact boxes, these boxes that can change the direction of the market, change the speed of the market, and really just do things that upset the apple cart, if you will. Everything that I teach in this room, guys, revolves around patterns. Everything that I do in this room is educational. So I want to get one in here for the lawyers real quick. This is educational, informational purposes, guys. Nexgen will not tell you when to enter the market. Nexgen will not call trades for you. Nexgen will not be your trading advisor. What we're going to do and what we do every day is we're going to talk about NinjaTrader and we're going to talk about TradingView, and it is my job to teach you to read indicators. Both platforms are effective. Both platforms are amazing. Both platforms come with a very simple plan, guys. Andy V says, those who think they know it all will not learn anymore. Yeah, I've met a lot of people like that too, guys. And for all of you alphas in the room, it's important to go back a step, to knock it down a notch, go back into that student role and allow yourself to soak up all the goodness, guys. Our first hour is going to be dedicated to learning to read charts. And guys, I've already posted in the room, if you scroll up in the chat box, I have given you trading plans with checklists for both platform, whether it is NinjaTrader or TradingView, guys. We're going to use 3 rules and 2 charts to build a foundation, allowing you guys to read indicators and most importantly, recognize advantages. Yeah, the whole thing's going to be recorded, Jerry. It's already being recorded. So now the whole world knows that you just asked that question. Yeah, I've got Camtasia running, and then John's going to kick it in on his end once he starts talking as well. So, and then we'll splice the two together to make one amazing video. Guys, recognition of advantages. This is what gets you into trades. Recognition of advantages is what creates a trade. And chart reading is about 90% of your typical day. Active trading is all of 10%. He's going to be here, Gary, 10 a.m. And guys, through your chart reading, you're going to understand these very key concepts. You're going to understand where the market is likely to continue. You're going to understand where the market is go. You're going to understand where the market is likely to stop. And these concepts become ways to enter, ways to manage, and ways really to embrace the 90%. Yeah, Wayne, if you will send it to me in a DM, I got you. Send me those, guys. And this is one thing. The second half of class is not going to be chart reads the way it typically is. So if you need help, if you're like, man, I just want a little feedback on this one, Wayne, do me a favor. DM me those pictures. It just makes it easier than me have to go find them, to save them, to get them, to annotate them, and then to send them back. If you could help me with that process by putting it in our direct messages, It would really streamline the process, especially if I get 10 to 15 people sending me pictures this morning, which is 100% okay. We're going to go through rules for when it's okay to enter the trade, guys. Rules describe a pattern. The pattern can be proven to win more than it loses. And that is what creates an edge, and that is what Nexgen teaches, the recognition of that edge so that you feel confident entering a trade. Everybody in the room has the ability to simulate, and the first step to becoming an amazing trader, a profitable trader, is to post in the room, guys, to ask for feedback, to make yourself just a little bit vulnerable. Show me what you're doing and give me the opportunity to help you do it better if you need that help. The more you post, the quicker you're going to get to where you want to be. Thanks, Wayne. I'll get you. The goal is that you're always practicing the correct rules, guys, because the rules provide the advantage. And really, you want to avoid the idea that, oh, it's just simulator, I'll go crazy. Start to practice like you want to perform. And simplicity. The trading plans that I dropped in the room are only 2 trades deep. There's only 3 things that you have to be able to recognize in order to get into that trade. And this classroom is dedicated to entries, guys, getting you into the market at the absolute best spot where the market is most likely to continue, where you have the least amount of risk and the highest profitability. And it will be your job to learn those looks, to recognize that pattern, to be able to look at a market and say, my advantages are in place. I can't wait to enter. I will take this trade. And only you are in control of your entry. The spreadsheets that I dropped in the room, they're already in there, guys. They have pictures of rules met. They have pictures of client trades. They have pictures where you can build your plan and a trade tracking sheet, guys. And the people that post in the room the most, the people that fill that spreadsheet, that annotate their charts, that request feedback, those are the people that are typically getting where they want to be faster than the people that are not. We're going to start with NinjaTrader. And guys, I'm going to cruise through this. I'm going to get John in this room for you guys as quick as I can. I know that's what you're here to see. We're going to talk first about what we call a high probability trend trade, guys. There's this idea that you can get really good at one thing that provides consistently. You can get really good at one thing that can be proven to win more than it loses. And then from that foundation, you grow and you see more and you do more and you learn to manage more effectively. So we're going to talk about the high probability trend trade on NinjaTrader first, and it's only 3 rules. That's it. You have to learn how to recognize strong triggers because strong triggers provide the advantage of momentum. You're going to be able to recognize a termination conditions. It's coming to me, John. I've got it. So that you can make sure that you have room to profit targets, assuring that you have the advantage of a clear path. And then finally, rule number 3 is just defining your entry, guys, getting in at the point where the market is most likely to continue. These 3 rules happen on only 2 charts. That's it. There's a big chart and a little chart, guys. Your large chart is a slow-moving chart. It's a very broad stroke of a brush. It shows the overall opinion of the market. And on the most current bar, you will be able to recognize direction, momentum, and areas. 1 bar on a large chart. Rules 1 and 2 must be met on the large chart, guys. And it's those rules, those advantages that send you to the small chart, the faster chart, the entry chart. And on the entry chart, you will be able to pinpoint precisely where the market is most likely to continue. And inside of that 1 bar, we're going to use 20 to 30 bars to define retracement, entry, and continuation for the highest probability trend trade. So, John, he went to go teach yoga, I think. He'll probably get you, though. So momentum and path defined in 1 bar on the large chart, entry defined on the small chart. And it's that small chart that allows you to reduce risk. It's that small chart that allows you to maximize your profit potential. We use these 2 charts, and John Novak put these 2 charts in place and gave me what is actually my favorite picture in the room. Ask yourself, who am I trading against? Who am I trading with? And the large chart, guys, I want you to picture the big crowd, the institutions, the man, the 1%, big money, whatever you want to call them. But these folks win, and they win often. So your plan is designed to keep you in line with what the large crowd wants, to trade with the large crowd, to use their momentum to stay away from their decision making. And when the large crowd gives you what you need, we're going to embrace the small crowd. This is the small chart. And these are your fighters, the ne'er-do-wellers. And these folks create what we call a retracement. And now the clinical definition of a retracement is a small move in the market that is counter to the underlying trend. And we're going to take advantage of the retracement that they create. We're going to pinpoint right where it's most likely to fail. And guys, you're going to use that failure point for your entry for the highest probability trend trade. And the great thing is that when the large crowd gives you those advantages, the small crowd typically fails up to 70 to 80% of the time, which means that by embracing the rules for the high probability trend trade, you can trade a pattern that you can prove, that you can test, that you can verify, gives you the potential to win up to 70 to 80% of the time. And it is difficult to not be a successful trader with that win percentage. We're going to talk about indicators. Both charts will have indicators. Both charts will have areas. This is your roadmap for the tools that you're going to use, guys. You're going to see divergence highs and you're going to see divergence lows. And what divergence is a loss of momentum. At a divergence high, you'll see a magenta line print with a negative number. And I like to think of it, the buyers were in control and the sellers stole their momentum, guys. So divergence is a loss of momentum. And when the market pushes down, the sellers are in control, the buyers steal their momentum, and they let you know it with a bright blue line. And divergence is really synonymous with loss of momentum. You're going to see Fibonacci resistance, you're going to see Fibonacci support, and you're going to see these yellow 1-to-1s, guys. And these are all Fibonacci areas. And when the market is trending up, divergence highs, Fibonacci resistance, and yellow 1-to-1s can behave as areas of resistance. And when the market is trending down, Fibonacci support, divergence lows, and yellow 1-to-1s can behave as areas of support. And we're also going to use trigger lines. And trigger lines do all the heavy lifting for you, guys. Trigger lines will show up in every rule. Trigger lines will be used first to define momentum. They'll be used to define termination conditions. And those large trigger lines will be defining your perfect entry, guys. And all you need to know about them is that there are small trigger lines, two solid lines working together to create the small triggers. It's a fast moving average. And then your large triggers are just two dashed lines. And these two dashed lines are a slower moving average. They're going to show up in everything you do. So what I'm going to do is I'm going to break down the rules individually. We're going to talk about each rule. We're going to talk about the advantage that it provides. If you are brand new with me, or even if you've been with Nexgen for the last year and you're like, man, I just need the refresher course, I cordially invite you to type your questions in the room. Let me know if there's anything I can do to provide clarity. Rule number one is rule number one for a reason, guys, because when your large chart has strong trigger lines, you have the advantage of momentum. And it's really one of the easiest lessons that you're ever going to get. If the background on your large chart is green, the market is going up, you're in an uptrend, your highest chance of success will come from looking for rules to be met for high probability trend trades long. In a downtrend, your background will be red, and again, your highest chance of success will come from looking for rules to be met for high probability trend trade short. Now, here's your little cheat. Here's your little cheat, guys. In an uptrend, the only way rule number one is met is if both small and large triggers are also green. And in a downtrend, the only way rule number one can be met is if both small and large triggers are red. And the look for strong triggers has nothing to do with price bars. The look for strong triggers has nothing to do with Fibonacci areas. It simply means that in an uptrend, your small triggers have broken above and away from the large triggers. And the large triggers are wide, and it's the space between that lets me know that the odds are favorable for the market to continue up. In a downtrend, the colors match, the smalls break below the large, and it's that space that's created like scissors that are open lets me know that the odds are favorable for the market to continue down. Odds favorable momentum has been the battle cry in this room for years, and odds favorable momentum pushes a market in the direction of that trend. Odds favorable momentum is what we look for to break key Fibonacci areas, and odds favorable momentum will even cover a lot of the challenges that I faced as a brand new user, because it is very difficult to stop a market with momentum when it's on the large chart. Boaz, just a little heads up. It's a little different structure today in the room. If you need feedback on your trades, do me a favor and message me privately, direct message me. John Novak will be taking over the room. And when he takes over the room, he's going to be trading live. So guys, if you need feedback on your charts, if you need a little help, please direct message me rather than post in the room. That way I don't have to interrupt John's class trying to give feedback on charts. Guys, strong triggers is rule number one because strong triggers is hard to stop. Strong triggers ultimately become weak triggers, and that momentum runs out, guys. And when the small triggers work their way back inside of the large triggers, when those scissors close, if you will, this is a look of weakness. And when I have weakness, anything can happen up or down. And the idea is that you as a trader can look at your large chart and look at the most current bar and say to yourself, I have momentum. The advantage is there. The advantage is in place. This is a market that's going to be hard to stop. I need to go make sure that I have room to profit targets. Guys, is everybody good with that momentum look? It takes the most current bar to decide whether you have momentum or whether the colors don't match and that momentum is not present. And that's it right there on the large chart. The larger up, the smaller down. There is no more momentum to push the market up, and it seems to be falling. Rule number two is going to keep you out of the decision-making process of the large crowd, guys. Rule number two is designed, I think, really as a safety measure for the new users, making sure that you're not trading in determination conditions, making sure that you have room to profit targets. And guys, let's just insist on coupling momentum with the advantage of a clear path, nothing in the way. To define a termination condition, the one thing I want you guys to latch onto is that on your large chart, all of those horizontal lines, your areas on a large chart, this is where the large crowd, the people in control, the men and women with the money and the influence are most likely to make decisions. Whether it is a divergence high, Fibonacci resistance, or yellow one-to-ones when the market is trending up, these are areas where the market could stop, bounce, reverse completely. And in a downtrend, yellow one-to-ones, divergence lows, Fibonacci support, these are where buyers buy, where sellers sell, and where fights happen. So to define a termination condition, I'm a big fan of writing a recipe, making sure that you're consistent. The first thing that must happen is price reaches an area. And when I say price reaches an area, what I'm referring to is dynamic Renko bars get to Fibonacci resistance, get to a divergence high, get to yellow one-to-ones. And once price reaches that area, we're done with price. We no longer need it. That's kind of like setting off the decision-making process from the large crowd. When price reaches an area, whether it's resistance or whether it's support, all you have to do is count trigger lines, and it's going to tell you everything that you need to know. Trigger lines will tell the story on the area. And if none of your trigger lines make it above Fibonacci resistance, if none of your trigger lines make it below Fibonacci support, this is the textbook look. This is a termination condition. And in a live market, it's going to look very much like this. So rule number two says, good morning, Miss Cindy. Nice to see you. Rule number two says, awesome, guys, keep them coming. Oh, you're going to Paul? I'm not sure. I'll let you guys do it. Rule number two says no trades into the area. If rule number two is not met, no trades into the area. Good morning, Sergio. Good to see you. This is an area that could create an untradeable bounce, which means that if you take a long position directly into the area, you're more likely to lose it from a reaction from that area. This is an area that could break. Price triggers, everything could get above it, and then suddenly you have a clear path again. This is also an area that could reverse the market, guys. And you're going to know about these areas long before you reach them. And if you learn that simple recipe, when price reaches an area, if none of my triggers break, I choose to sit on my hands. I choose to do nothing. I choose to not trade into that area. Because if you go back historically, and all you do is look at times when the market reached an area and the triggers didn't break, what you're going to find is that more often than not, it produces a loser with any trade taken in the direction of that area. And these are what we call avoidable losers, guys. And avoidable losers are one of the easiest ways to maintain, to hold on to your equity. Um, hey, guys, you have to DM them. Victor, you have to DM John, because if John takes over in the room, then I might as well just shut down and give him the microphone right now. So, guys, you can send them to him. You can send them to me. I'm getting through this as quickly as I can while still giving the good lessons. And then John Novak will be on you guys, I promise. Rule number 2 is a product of thousands of pictures and countless hours of study. And when price reaches an area, no triggers break, your advantage is gone. The edge is gone. No worries. Victor, we've already exchanged a lot. Just do the same thing with John. Your trigger lines tell the story, guys. If price reaches an area and none of the triggers break, guys, that's a termination. And this is that 90%. This is that sitting still, doing nothing, waiting for your advantages to come into play. And areas break all the time, all day long. If they didn't, we would be caught in a range, guys, and we would never get out. So keep counting triggers. If 2 of your triggers, both small, get above the area that was just a termination condition, you can say to yourself, hey, now with all that momentum, this area has the potential to break. But new users, just a little ominous warning, this still isn't your best look. Only 2 triggers through is less likely to win than lose. When 3 of your trigger lines, both small and 1 large, get through that area, guys, now we're in the yellow. Now we're no longer red, and that yellow means that the potential for breaking is there. It is a better potential for breaking. This is actually the second trade look, large chart look for the plan that I gave you. It's called a 50-50 trade, guys. And it relies heavily on the idea of momentum, and it's going to rely heavily on the perfect entry because the area is still not broken. It's only potential. But when 4 triggers make it through an area, guys, when 4 triggers get above that area of resistance, when 4 triggers get below that area of support, now the area is broken. Now the path is clear. And guys, your path remains clear until you reach your next area. So the easiest trades that you could ever take as a brand new user, the highest probability trades that you'll ever take as a brand new user, will first start with momentum, that separation between the small and large. And then you will make sure that price has not reached that key area that could stop the market. And these tails right there on your large chart, looks like it sprouted a tail. Some people call it a wick. Some of you were brought up to learn that it's called a shadow. Guys, you're going to use rule number 3 to pinpoint right where that tail is most likely to peak. That's going to become your entry for the highest probability trend trade. So I just want to ask real quick, are you guys good with the idea that when price reaches Fibonacci resistance and none of the triggers break, that's an area that could create an untradeable bounce that could reverse the market completely? Thanks, Steve. Everybody calls them something different, right? Some of you wash clothes, some of you Southerners wash clothes. It's the same thing. Call them what you want to call them, guys. No triggers through, the market stops going up. Only 2 triggers through, the market stops going down. Only 1 trigger through, big untradeable bounce. Guys, a little bit of study, going back and using that recipe, when price reaches Fibonacci support, if the trigger lines don't break, that's an area that could stop the market. And you can see just how efficient and how effective Fibonacci is if you just scroll back a little bit. So our most current bar is void of momentum because the colors don't match. And our most current bar also has 2 triggers above 1-to-1s, and it has 2 triggers below 1-to-1s. And guys, this is not your high probability look. This is a look where you're going to have to take a guess and maybe infuse just a little bit of hope that things go your way. So we have momentum. The path is clear. Life is good. It's time to look for an entry, guys. It's time to let the small crowd fight. And the accuracy of rule number 3 is so in play that you're actually going to use a limit order, guys. You're going to wait for the market to come to you. And I'm going to write this out because if you learn this phrase, I'm going to use a limit order which means that I wait for the market. And I'm going to buy or sell a pullback, that little retracement created by the small crowd. And I'm going to do it at an area. And guys, trades originate at areas, at fibs, at mid bands, at yellow 1-to-1s. But the key and the magic to all of this methodology is that those areas are inside of triggers. And if you simply learn this phrase, you will call your shots. And if you just learn this language, you will never wonder where your trade is coming from. You'll be able to pinpoint it long before the market gets to it, and you will wait for the market to come to you, and you will be waiting right at an area inside of triggers. Guys, triggers are moving averages. Price returns to moving averages. It's called regression of the mean. I'm not even a math guy, and I learned that term just to teach this class, guys. Your trigger lines will define where the retracement is most likely to go. Your areas, fibs, midbands, and yellow 1-to-1s, will define where the market is most likely to bounce and continue with the underlying trend. So by buying or selling a pullback inside of triggers, this is your pattern for entry. This is the pattern to get you into the highest probability trend trade when the large chart has momentum. When the large chart has shown you that it has a clear path, you'll come to your small chart. And guys, your small chart is going to be railing north. And there's this phrase that traders dread. It's called the fear of missing out. And you will have the fear of missing out as a brand new user. That's okay. A little bit of study, a lot of trust comes into play. The entry pattern begins with a reversal bar for the new user. When this reversal bar prints, I don't know if it's going to be 1 bar or 10 bars. Thank you, Swathi, for that yesterday. But what I can say is that price is most likely to retrace to return to these trigger lines, large and synthetic. Triggers define the retracement zone. And then if I learn my language, I'm going to buy or sell a pullback at an area inside of those triggers, guys. You'll notice that there's a mid band. There's also yellow 1-to-1s. And this creates a window. In this window, I call it the window of opportunity. And there's a couple things that you will know for sure. The market is most likely to retrace somewhere from the top to the bottom of those triggers. So I assume instantly that it may go to the bottom of the triggers. And the market is most likely to bounce either from this midband or from these yellow 1-to-1s. And to be honest with you, I'll never know which one it's going to be. I'll never know if it's going to be the midband. I'll never know if it's going to be the 1-to-1s. But because of the large chart advantages, guys, because your large chart has odds favorable momentum, because your large chart has absolutely nothing in the way, your job will be to activate a limit order just above the highest point of support, closest to the reversal bar, because we're not going to trip over a couple pennies to save a few dollars hoping that it goes lower. This is your pattern for the high probability trend trade. Reversal bar, define where the market is most likely to retrace, define where the market is most likely to bounce, get in at the area closest to your reversal bar. Anything below the triggers in this long trade, any areas, any fibs, any mid bands, any yellow 1-to-1s, this is the wrong side of the trigger lines, guys. And if the market is able to push through the retracement zone, if the market is able to push through the areas most likely to create a bounce, this is exactly where the market should not go. High probability trend trade entries are not taken from beyond the triggers, because once you get beyond the triggers, you will never know if, when, or where that market is likely to continue up. In a downtrend, first the large chart is down, it has momentum, the path is clear, adherence to rules pays dividends. Your pattern begins with a reversal bar, a fight from the small crowd. You can define where the retracement is most likely to go using triggers, large and synthetic. So I know that the market may go from the bottom of these triggers to the top of these triggers. And I know that the market is most likely to bounce at an area inside of those triggers, fibs, midbands, or yellow 1-to-1s. And guys, you will, with a little bit of study, with a little bit of practice, with a little bit of feedback, find the courage to activate a limit order, to wait for the market to come to you, to literally sell the market on its way up. And this becomes your entry for the highest probability trend trade. Any areas beyond the triggers are not where entries are taken for high probability trend trades, guys. Once you get beyond that retracement zone in the areas that may create a bounce, you don't know if, when, or where that market is likely to continue down. And you can use that concept, and this is in the KISS plan, for initial stop placement, guys. When you learn and when you trust the rules for entry, you have defined where the market should not go. Initial stops are typically placed 4 to 5 ticks above all the trigger lines, below all the trigger lines, guys. And this is how you're going to minimize risk, because anything that wins 70 to 80% of the time, it loses 20 to 30% of the time. These are acceptable losses. These are normal parts of a positive equity curve. And guys, these are, it's just a cost of doing business. So for the brand new user, or for those of you in this room that aren't finding the consistency you were looking for, this is a great first trade to learn. And it starts with momentum, that separation between the small and large. And it makes sure that price has not reached areas so that you have room to make targets. And guys, you will pinpoint precisely where this tail is most likely to form, and you will do it by identifying areas inside of triggers. And your patience waiting for that pullback minimizes risk, and your patience waiting for that pullback maximizes profit potential. And guys, you can study this trade without ever having to take a trade. So when the market gives you momentum, when the market has at least the potential to break, you'll see these tails. Circle them. All it is a pattern, guys. This is a pattern that has been repeating itself for as long as I can remember. And if I go back to my small chart, there's my first circle, and it was a pullback right to an area inside of triggers. And if I pull back a little more, it was a pullback to an area right inside of triggers. And guys, this is the easiest trade you'll ever take. And for my brand new users, we're going to do this real quick, and I want to show you how you will call your shots. When the large chart says look for an entry, if you learn that phrase, I will buy or sell a pullback at an area inside of triggers, guys, you already know where your triggers are. You already know where your areas inside of triggers are. And all you need now is a reversal bar, ta-da, and this is going to be all that you need to say, if they make it up here, all I have to do is activate a limit order just below the lowest point of resistance. And if the market makes it up, oh, it didn't make it, and now it's coming up, had to move my entry. If the market makes it, I'm going to mess up that look. There we go. And it pulls right back, guys, and then it continues down. And this is a pattern that's repeatable, that's testable, that's provable. And you can, with beyond a shadow of a doubt, prove that this pattern wins more than it loses, guys. And that is the edge of trading. That is the advantage of the methodology. So take the time to study it. If you have questions, ask a million questions. And if you go through the spreadsheet that I gave you guys, and you look at the client trades, we did this yesterday. I'm going to do it real quick. Perfect trend trade long. If I click on that picture has momentum. It has the potential to break, and it has a pullback to an area inside of triggers. And that's not the amazing part. This picture was taken in 2021, guys, in the November contract of crude oil, which means it was probably October 2021, 4 years ago. It's the exact same look. It's the exact same pattern. And guys, it's the exact same result that tends to happen more than it doesn't when you learn this one pattern. So I encourage new users, as the brand new user, focus on the process that's creating results. Focus on the pattern that's creating results, and you'll be amazed at how the results seem to follow. Any questions about the high probability trend trade? I know I'm going a little faster today, guys. Tomorrow I will say the exact same thing. The day after, the day after, the day after. My first hour is consistent. The language is consistent. The rules are consistent. And all of that is in efforts to make you consistent. The second platform, I am frozen here. Give me 1 second, please. Does anyone else hear that music? Oh my gosh, I've got like spooky music in my headset right now, which is weird. Let me figure out where that's coming from. Camtasia, 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 NinjaTrader Task Manager, Trading View. All right, it stopped. That was really weird. I had the craziest spooky music in my headset. Sorry, guys. It is. And it was Halloween music, Cindy. It was crazy. Cindy, I'm going to send you a private message asking about Hollywood, Florida, by the way, because I know you're down there in Miami. Guys, we're going to talk about TradingView. And TradingView is going to be different than NinjaTrader, and there's a lot of similarities. Similarities in the areas, in Fibonacci, I'm sorry, not Fibonacci, in divergence highs, divergence lows, one-to-ones, mid-bands, trigger lines. It's very familiar. But the one thing that is not in play is Fibonacci. John Novak has programmers working on it. They're trying to get it done. But until they do, there's opportunities for you to obtain areas of supply and demand. They're created by a company called Chart Prime. And I think they're amazing, and I'm using them. I prefer Fibs, but this is a great alternative until you can get them. And they just will be used the same way Fibs are, guys. These are areas not to trade into. These are areas that could stop the market. The other difference is the bar structure. Nexgen taught on minute bars forever ago. Nexgen, minute bars are nothing new to Nexgen, but it's new to a lot of you people that came up on Renko bars. Your large chart is a 15-minute chart, guys. In 15 minutes, you could have 100-point moves. In 15 minutes, you could make a sandwich, walk the dog, pet the cat, and the bar's not even done. So your large chart is a very slow chart. And in the plan that I gave you, I've removed the large triggers because they're distracting. I have removed the background colors because I don't want you forming opinions based on colors. It's just too slow. So 15-minute will define direction, momentum, key targets, and terminations the same way it happens on NinjaTrader. Your small chart is a 1-minute chart. And guys, that's still a long time. It really is. Hold your breath for a minute. You'll realize it's a long time. But we're going to define immediate strength using the trigger lines, and we're going to define entry point on the smaller, faster chart. And once again, it's just who's in charge. It's not you. It never has been. It never will be. The large chart wins. The large crowd wins, guys. And both of these plans are designed to keep you in the good graces of the large chart. And then the small chart fights are where we're going to pinpoint our amazing entries. To read the large chart, that's actually pretty simple, guys. And it won't take you long to get good at it. Because there's no large triggers, because there's no background colors, small triggers define the direction you'll be looking for your rules to be met, guys. They're either up or they're down. And your highest chance of success as a brand new user comes from going with those triggers. And let it be decisive. If you are looking at your 15-minute chart and they're flat and you can't decide if it's up or down, if they can't define direction, how on earth are you going to define direction as a brand new user? So let them be up or down. Here, the most current bar is up. The triggers are up. And then I blow up that picture because the second thing that you will ask yourself is where is the current price in relationship to those triggers? Inside of one bar on the large chart, guys, you might have price above, inside, and below the triggers before the bar is done. So you'll look for your highlighted price and you'll ask yourself, where is it trading in relationship to those small triggers? And there's three options. It's either left of the triggers, right of the triggers, or right inside of the triggers. And this is how you're going to define momentum on the chart, guys. If you are left of the small triggers, whether it's down or up, you're on the strong side. This is odds favorable momentum. This is the best of the best. This is when that market is most likely to scream in the direction that it's going. If you are right of the triggers, this is the weak side of the triggers, guys. And you're still looking for long trades. You're still looking for short trades. But now you're saying to yourself, this is when 1-minute areas are most likely to hold. This is when getting paid at areas where very tight management makes the most sense, because from the weak side of the triggers is where reversals are most likely to occur. And if you are inside of the small triggers, we call this the transition, guys. And the transition side of the triggers, my management hat is on. And when I reach an area, I may choose to take profits and get to break even. It doesn't necessarily mean that I'm going to exit the trade like I may on the weak side, but it also doesn't mean that I'm going to go a little willy-nilly like I may from the strong side, guys. So where you are in relationship to the triggers will help define momentum, and where you are in relationship to the triggers will set you up for management. And then finally, the ever important question is room to targets. Miss Cindy, and just a reminder for everybody in the room, John will be taking over in about 15 minutes. If you need feedback on trades today, guys, please send them to me through direct messaging. I will annotate, I will reply, I will get you your answers. We're gonna keep this class focused on getting through 101 and then letting John Novak take the stage, because there's 72 of you in here, and I know that only 12 of you are here to see me, guys. Room to targets, momentum and path. Everything that we do revolves around momentum and path. Everything that I teach new users revolves around momentum and path. And if you just learn those two concepts, guys, you have the keys to the kingdom. Thank you, Cindy. The first trade, the most common trade, is a trend trade, guys. And a trend trade is only 3 rules. And it begins with the 15-minute chart not trading directly into the areas. So you're going to say to yourself, the market is up. I'm on the strong side. I have room to targets. One of my options for entry is a trend trade. Not trading into areas. 1-minute chart, not trading into areas, guys. Room to profits. And then if the first 2 rules are true, I'll go to my small chart. And I will buy or sell a close on the correct side of the small triggers at the 1-minute mid-bands and areas, guys. And the pattern is consistent. The small triggers are up. They're in the transition point, trading inside of those small triggers, and I have room to targets. And because I have room to targets, I'm going to turn my attention to the smaller, faster chart. Guys, give me a Y if you can hear me, please. Cool. Thank you so much. Is the automation going to take over the Discord from now on? No, TB. I'm going to give John Novak a couple days. He's gonna talk about it extensively, but I refuse to give up my room to John Novak. He'll make his own room. He's the boss, right? Guys, the moment these small triggers roll against you, you're going to look for the pullback. You're going to look lower. You're going to look just further down the road. Did that sound tough, TB? I almost sounded like I had a little confidence sitting in this chair. And then, guys, when it gets to your area, you're not just jumping in. We're not waiting with a limit order. You will wait for a close on the correct side of the small triggers. And when I say that, when I say a close on the correct side of the small triggers, what I'm talking about is first, it's an up bar, and 2 corners of that bar close on the weak side of the triggers. The bar finishes, the timer stops counting down, and because of that patience piece, what you've done is you've put yourself into the market from an area where the market is most likely to continue with the large chart advantages. And going the other direction, large chart reads will take you a half a second, guys. It is down, it is strong, and there is room. And because there is room, you'll turn to the small chart. And the moment the small triggers roll up against that downtrend, your job is to start looking for areas further off in the distance. It may take 10 minutes for the market to get there. It may take 15 minutes for the market to get there. And when it reaches, we're not just entering. We're not jumping in. We're not hoping that it holds. The entry for the trend trade is a down bar which closes on the weak side of the triggers, the correct side of the triggers, guys. And this is your entry for the trend trade. And if you just go back and you look at a small chart, you'll notice that the market pushes down until it gets back above the triggers. And you'll notice that the market pushes down until it gets back above the triggers. Sometimes it is happening, that automatic liquidation happening during the pullbacks. What do you mean by automatic liquidation, Ms. Swathi? And I will certainly address it. I'm not completely sure what it is you're saying. You don't put any stop loss? That is your right. But can I ask? Oh, but still it's closing the trade. Huh. I'm not sure. Unless you're running out of funds in the account and your broker is doing it. I'm not sure if it's live or sim. It's NinjaTrader. Are you in a live account or a simulated account? A simulated account? I'm not sure why that would happen, to be honest with you. I would encourage you guys, if you have ninja challenges like that, reach out to NinjaTrader, put in a support ticket with them, explain the problem, and chances are they have a fix that is going to be a lot quicker than my guesswork. I've never actually heard of that happening, and I'm sorry, I don't have a fix for it. If there's anyone in the room that has insight, this is one of the great things about a community. There may be someone here that's experienced that. I've actually never had that challenge. I apologize for not having your answers. I try to have all the answers, but sometimes I don't. But I know the resources to find them. Guys, the other trade that you can take, well, you can take a million trades. The other trade taught is what we call a momentum trade. And guys, a momentum trade is exactly what it sounds like. It relies on momentum, 100%. And it begins just like the trend trade, room to targets on the large chart. The second rule is that the 15-minute is on the strong side of the triggers. And guys, remember, the plan that I give is the best of the best, the highest probability. This is not the only way to take trades. This is a great way for new users to find success and consistency with the fewest amount of rules. Good morning, Aziz. It's good to see you too. It's been a while. Guys, strong side of the triggers, odds favorable momentum, best of the best, hardest to stop. And your 1 minute must have strong triggers, that separation between the small and large, everything angled in the direction of the large chart. And this is the only trade that will use a limit order, guys. This is the only trade where you will wait for the market to come back to you. And it's a very specific pattern. When the large chart is up, when you're on the strong side, when there's nothing in the way, then and only then will I go look for a trade. This is typically the first trade, guys. This is about 10% of the trades that you'll take. It requires strong triggers, but more importantly, it requires that the market break an area and then snap right back to it, because resistance that's broken behaves as support. And as long as you still have strong triggers, you'll wait for the market with a limit order right there. And when it pulls back, you will say in your best, loudest voice, I sure hope all that strength pushes it up to the next area so I can get paid. It is a trade that is 100% reliant on momentum. It's a very low risk trade. Your stop can go below the zone, the area that you're hoping holds, the HVA line. And guys, these trades, when they fail with that look, very often turn into trend trades. Almost always turn into trend trades, it seems, unless you don't get your entry rules met. So know that if the market doesn't start railing, if the momentum begins to waver, if the triggers turn against you, it may turn into a trend trade. On a downtrend, strong side of the triggers, nothing in the way, support breaks, it begins to behave as resistance, and you enter the market. And you wait for the market to come back to you with that limit order. And it's a very low risk trade, guys. It's a very small risk entry. And I made this picture. I had this conversation yesterday. And I really do. I have the privilege of being able to talk to you guys daily. and get your thoughts on things. And I made this picture, if I can get to my editor, and I wanted to show this. When a momentum trade, maybe the rules aren't met, the triggers roll, the smalls aren't separated, guys. Once the momentum trade fails, it very often turns into a trend trade. So if you're looking for your trend trade entry, guys, very often a momentum trade will slide across an area and then drop. The small triggers will roll. You'll actually see the progression, the loss of momentum. You can circle areas and wait for that trend trade, guys. And this becomes typically the second trade. You also see it on NinjaTrader. If you just jump into the market hoping momentum carries it, once it fails, it very often turns into a trend trade. So it's a pretty awesome little lesson. If my momentum trade doesn't go the distance, my next option is still a trend trade. I'm not out of the game. I'm just waiting for a higher entry, or I'm just waiting for a lower entry, waiting for that market to come back to me. And guys, that is TradingView. And that is NinjaTrader. And that is the core, and that is the base, and that is the foundation, guys. So if you're a NinjaTrader, the KISS plan is a stepping stone in your learning journey. It's designed to optimize your chances of success. It's designed to teach you to read your indicators. There's a checklist for entry and a nice solid way to manage it, and a checklist for entry on the potential to break, and a way to manage it. In the KISS plan, there's your minimal workspaces, how to read your indicators, and in the second page is checklists for entries. Yes, Victor, I'm recording mine. John will record his, and then we will splice the two together and get them on YouTube. So I'm hoping he throws some cool little effects in there. And guys, one of the easiest ways I feel, and I'm going to throw in my opinion, and my opinion means nothing. This is an educational room. It is my opinion that if you lay a checklist in front of you as a brand new user, if you commit to having the checklist met each and every time you enter a trade, guys, these checklists are designed to give you the highest probability entries. These checklists are designed to put you in at the best spot with the least amount of risk, the highest profit potential. And there's this idea that great entries create manageable trades, guys. Everything that I teach in this room is a pattern. It's a pattern that is testable. There we go. Come on. It is momentum. It is path. It is a pullback to an area inside of triggers. And if you look at the TradingView journal, there's a trend trade. It is, bum, 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 bum. Come on. Oh no, it's a dead link is what it is. We get those every now and then. There we go. Thanks, Paul. It is first direction. It is path. It is pullback to an area. It is an entry on the correct side. And if you keep it that simple as a brand new user, you will be floored at what you can pull off. You will be floored at how you can call your shots. You will be absolutely mesmerized at the idea that you can look at a market, you can recognize a termination condition, you can identify momentum, and guys, if your rules are met, you know that it's a pullback at an area inside of triggers, and that happened 6 minutes ago. 6 minutes ago on the S&P, guys. And this is a pattern that repeats itself every day. And you knew exactly where the market could stop. And you knew exactly that you didn't have momentum. And when it reversed, that strong top gave you the best of the best look to capitalize on the way down. Are there any questions about high probability trend trades, guys? I teach this classroom with the assumption that there is no knowledge coming into this room, that you are starting at ground zero, and that your highest chance of success will come from learning to read your indicators before you look for trades. My class is the same Monday through Friday for the first hour, and then the second half of the class, guys, is feedback on everything that you do. Feedback on the charts you post, the questions you ask, giving you answers to anything that's going on in your head as you evaluate the software, as you learn to be consistent. So post in the room, and look at that, the auto system just activated a limit order. And that's a great segue for John Novak to come in to talk to you guys, to start talking about this auto system And what's pretty amazing is the auto system is nothing more than a rules met trend trade, giving you the highest chance of success. And John Novak's going to come through and he's going to talk to you about ways to use small charts to manage these entries. So without further ado, crude oil is killing it. I'm going to let John Novak take over this room, guys. Thank you, everybody that showed up. I know a lot of you are here for that small chart management, whether you have the auto system yet or not. And I hope that you get it because it's an amazing system. We worked really hard on it. The management lessons. The management lessons are going to be huge. Absolutely. So, Swathi, a limit order is so easy. If I am above the current price, sorry, John, you don't get it yet. If I'm above the current price, give me 1 second, John. If I right click on the chart, Swathi, my first option is sell limit, which means if the market's coming up, hits that entry, it's going to put me in a short position. If I am below the most current price, simply right click, it'll allow you to buy. And if the market reaches that buy limit, the expectation is that it goes up. So it's just a right click and either sell or buy, depending on whether you're going long or short. You're so welcome. And guys, I'm going to give John Novak permission to speak. Have an awesome day. I will be around. You can direct message me your charts, and I'll be giving feedback all day on those, guys. You guys take care. Be good. John Novak, it is all yours.
All right, now we're recording. Okay, good morning, everybody. Welcome to Tuesday. We call it Second Monday around here, apparently. We're going to be going through, and I know you've heard this once, but I got to say it again for the recorder. We're going to go through our automated strategy, and we're going to talk about the large chart and the small chart and how you guys are going to be able to really maximize your money every day using this methodology. I've averaged over, I'd say, $7 to $8 grand a day every day on the four lot since putting this strategy together. You can't just let a strategy run by itself, or at least not yet. This gives us all of the large chart work that Mark sets us up for. But the one thing that the strategy doesn't do is it doesn't give us the small chart work that we really need to be super successful. So what I've done is I've set up my strategy, which you guys are welcome to this template. It's on our download section of Discord. Just to give you a quick peek again, just go to the download section and I've got my template in there, and I might have made one change since then, so I may re-upload that real quick. But I've also got a little bit of a different 13-2 chart. I'm plotting large chart reversal bar markers and large chart mid bands on my smaller chart, so I can help manage the trading system. And again, the trading system tells us when all of these rules are true down here at the bottom. I've got them really small, so you're not gonna be able to see them, but you guys can go through the video on our user guide for what each of the inputs mean, and each of, so short version is whenever they all line up and they're all true, you're going to get an arrow. And if you have the system enabled, you're going to get a trade. But not all trades are created equal. And, the markets are dynamic. That's one of the things that when I wrote the fibs back in the 90s, sounds old now, I said, Fibonacci adjusts itself every day to what the market is doing. And the smaller charts, larger chart combination has been fantastic for us forever. And, the first phase of our automated trading system was to get all of the large chart work done. More importantly, the look for when it might generate a signal and termination conditions, and the ability for you guys to be able to go in there and manage. What I've done from this morning is I set up just some circles, where the automated trading system is generating some trades, because I think it's horrifically important, super, super, super important to be able to go back and study how are you going to incorporate the smaller chart in your trading itself. So when you go back on the smaller chart after you've drawn these circles, I'll go back here real quick. And let's see. All right. So, and again, you can see a lot of trading happens before the rules are true on a large chart. But when you go back and you start analyzing the circles, you'll start seeing some very, very clear patterns. When you have divergence from a Fibonacci area, as we do here, long trades become very, very difficult to win. It's not that it won't win, but generally, this is the type of area where, if there wasn't fibs or divergence up here, it'd be a great spot. With fibs and divergence, typically you're going to want to wait with the system for a reversal bar, because if a reversal bar doesn't happen, you're not going to get a long trade. And coincidentally enough, after you do get a reversal bar, you get the opportunity, it goes back up like the system said. But this is where, you would have avoided a big loss. And one of the things that, 50 or 60 ticks is what the ATM is set for. So if you were allowing the system to get you in, it'd get you in here and you would be stopped out right about there and you'd lose a ton of money. So what our job is as traders, and, until I can automate in version 2, the second version, which will read the small chart for us, our job is to say what happened before my trade, and then, was there a second chance opportunity to get long? We call it in my video for management, I call it continuation. And continuation is really easy. If you either get to an edge where you want to take a chance, or whenever you get the small triggers above all of the other triggers, you get that second chance. And usually, when you find these continuation trades, they're almost at the same spot. Historically, I've seen this about 4 million times in my decades of doing this, but typically your continuation ends up about the same spot where your first trade was. And then ultimately you can get a hold of that winner, but this is the one you're going to have to do manually by looking at your large chart. Going forward, and if you guys have questions, you guys are more than welcome to drop them in. I want to go through a quick speech and then, let's be interactive in what we're doing here. So that way you guys, I'm trying to go quick. This is another one where, again, there's some things that cause difficulties for trend trades. And one of those things is, here was our entry from the system. That's why I have it circled here. One of the things that causes difficulties is divergence from one-to-ones. It's not that the market won't go down. It just means that the market really needs some type of confirmation. And, again, this is very, very early in the morning. So, again, there's two things to keep in mind. For me personally, I'll look at the overall downtrend and I'll look at the system signal. And I love this look. Again, this is just personal. With the divergence, they typically will stop out the prior high, which they do here. But instead, they made it high in a pivot, and then they stopped it out, and then they went. And, again, it's a difficult hold. There's not a lot of room because you're going to probably manage out of your trade right here again. It's just the way it goes. Whenever you get to pivot stop outs with double divergence, you're just going to manage out. And then ultimately, do we have still the right look for a continuation to the downside? So you may say to yourself, hey, I'll take one more trade to the downside. If you don't, it's okay. You don't have to catch every trade. With the NASDAQ and the automated trading system, you're going to get so many opportunities. It'll bring a tear to your eye. Again, look, this is the same thing that we talked about before. Divergence from one-to-ones usually makes it go up quite a bit higher. Again, this is where confirmation for me comes in very handy where you get a down bar and then you get an opportunity to take that trade without just jumping in, because a lot of times divergence from one to ones, the market will just keep on going up and never make a down bar. So this is a situation where, a down bar gets you in, and then you make it down to the edge of fib support with lots of divergence, and then that's usually the end of the party for us. And again, I'm not talking about all the trades in here. Obviously there's some discretionary trades you can be doing. I really want to just keep it hyper focused on system trading for today. Again, this is another case where you'll get divergence from one to ones, and with the down bar, the down bar does two things for us. Again, if you're going to just let it get in because the area is really good, that's fine. But the down bar does two things for us. Instead of having a risk that's way up here, we now know, because we have a down bar, we have a really good predefined risk, and that's as much as we're going to risk. So, again, it starts off in an ATM as 60 ticks risk. And, that's really unpalatable for most people. To lose a couple of those really stings. You guys know exactly what I'm talking about. For me, waiting for that pivot, if there's a reason why I should wait, generally gives me a good idea that, I only have to risk this much. So if I wait for a down bar, maybe even a little bounce, I've only got this much risk on the system trade. And if it goes, great. And if it doesn't, okay. And, ultimately, two divergences from a divergence line usually will end the party for us. Anyway, let's go forward and we'll just take a look at system trades again, and then we'll watch it live. I don't know, do I have any more circles? Okay. Another case where, I think this is probably the best look you're ever going to get for a trend trade. Everything on the planet, there's nothing down here. I mean, we got lots of room, and ultimately, sometimes even perfect trades don't work. If you put your stop behind the pivot, you got stopped out. Hopefully you were getting in close to the area. You still want to try to get in as close to the area as possible. And then ultimately, they're very mean. Sometimes they don't go and you get a higher divergence and you just have to get out. So, you're going to lose a little bit, but you're going to at least give yourself an opportunity to get all of this money. This is the idea of what we're trying to get. Everybody agree with that? We're trying to go from fibs down to the next support, and we're like, God dang it. They beat us out of our money with some higher divergence, and we have to get out of our trade. We're so mad. But then look, the thought of continuation kicks in your head. If the small triggers get back below the large triggers and everything else, you get an opportunity for some continuation, which, ultimately takes you down, and then you get another system signal, and then ultimately, you get pretty darn close to making most of your money. But again, remember what I said earlier, whenever you have that first trade that they beat you out of, you can almost draw a box straight across. And if your small triggers are below all the others and you've got areas, that usually is your continuation short area. Yes, you can sell the edge if you really are, you've got the cojones to do that. But, the continuation rules state realistically, you got to wait for the small triggers to get below everything, and then you have a better shot. All right, I like that picture more. That's a good one. But does everybody see what I'm talking about? This was your first entry over here. And it's just, they dick around for a little bit. It's the NASDAQ. They do that a lot. And then ultimately, they end up going. So, sometimes they just mess around a little bit before they go. And we just have to be able to recognize that. And the system was right if you left a 60 tick stop in there. But who wants to risk that much when you can risk 6 or 7 points max instead of 12 or 15 points? and then you can take a second chance if it lines up. Um, let's go to live here, and we'll just take a look at where we're at live. Let's see. We haven't had any signals. And again, it's not that there's not trades that you can do, guys. I'm a firm believer in two things. If you get a trend trade that especially has areas that include one-to-ones in them, like right here, take the trade. Again, the system may not do it or didn't do it because of Fibonacci resistance, right? So we hit resistance and it's not going to go long, but if the look is correct on the small chart, this is where you still do your discretionary trading. You can see very clearly, again, think discretionary trading and think one-to-ones helping me at some type of area. If you're going to really want to stack the odds in your favor, that's a really good look, and you get that discretionary money. So we've got a signal. Let's take a look at it. So right now the signal is below all of my resistance. What do you guys think? That's not good. And now it's moving up as we go, but again, I think the order, if we're going to get it, is going to have to be, we may not get it at all. It may just go up. Anyway, I was going to say at the mid band, you've at least got the opportunity. I guess you could go right there at the fib, but coming off of the one-to-one, usually it goes a little further down. Again, we've got to make a tail of some type for it to go. It has the right idea, but it's just not going to go or get filled. And again, look, pivot stop out at the edge, still one more opportunity, assuming we're going to go up to here. If we make it up to this spot, we're going to have to quit. We're really close to quitting anyway, just because we're getting really close to the edge of resistance. So, the question is, do we want to take something from the edge? Maybe right there. It's just we're kind of running out of room. You can see we got our signal on our large chart. And again, this is one where you have to kind of debate with yourself, do I want to get in from the higher spot? And, if you do, you can always get in right here. You've got limited potential up to here, which is still fine. Again, I like to see a lot of potential versus limited potential. But the other thing, if you decide you're not going to take a trade for some reason, you need to disable your chart, disable your system, because it'll keep placing the order there no matter what. So, if we were long right now, let's just say we went long at the one-to-ones. If we get a lower divergence, that would take us out of our position. So, and there's lower divergence. And, again, do we want to take advantage of the trade still or not? Again, I may still take one shot from the edge, but I want you to think about how much risk you would have to have in order to take that trade, which we may not get. Doesn't matter. It's not going to cooperate with me the first time here because obviously everybody's watching. So anyway, long story short, this is why I don't like to take it so close to the target areas, because if you get forced out of your position, you still wouldn't have lost any money, but it's just not enough room to make it worthwhile for the risk. So assuming that, somewhere up in here is our target zone. From down here, it makes more sense to me. And the other thing is you can have a very limited risk. That's kind of a termination condition. So we'll just cancel out of it. But from right here, it makes a little more sense to me to be able to get the rest of that long trade to the upside. So look, if I like it, I'll put a buy stop in. If I get a reversal to the upside, now you see how I limited my risk. It's still a little iffy, but not the best, not the best look right here. Deborah, my template settings are on this page. Should be on the installer too, but anyway, do you guys see? Again, if you have questions, please let me know. But again, not the best. Again, I just wanted to kind of show you a reversal bar entry, even though it's not quite the best, because it's okay. I made a couple of pictures, believe it or not. I know it's going to be shocking, but I made a couple of pictures from this morning. And, look, we may get back up here anyway, so we'll see what happens. We're not going short into one-to-ones, so I'll turn the strategy back on and we'll see if, this spot creates opportunity to go long later, like we talked about. Right now, it doesn't look like it. So let me find my pictures from this morning. I made a couple of them for us. I'm going to post this one in just so you guys can see it. And then, so here is the picture. Oh, man, blow it for me. This is the same exact look we just had, guys. Maybe from one-to-ones, because we had divergence. This is the debate on should I get in here or not. And you can see it's really below all of the triggers. It's not the best look. And then ultimately, if you do get in, second divergence took it out. So again, with the weaker triggers and the divergence from fibs, just not a really good trade. It ended up going up eventually, but just wasn't very easy. Let's put it that way. So anyway, now we wait. As you guys can see from the rules, we've got some challenges. Our large triggers aren't below the mid bands. The EMA's not below the mid band. We've got small swing one-to-ones that have been hit, which need 4 triggers past it. By the time that happens, we're going to be at fib support, which we'll have to have 4 triggers past that. So there's literally almost no way possible that our automated trading system is going to do a signal at the moment. So we have a minute. So it's a good time for questions, comments, concerns, things you guys want to go through. Oh, well, welcome to the NASDAQ. It changes quickly. All right, what do you guys think about the short trade? We got fibs, we've got triggers here. As far as the look goes, from the downloads page. So to me, this looks like a moderately good look for trade. And again, we got our arrow, but I'd like to get in a little closer to the better spot. And then the other half of it is we have to think about max loss potential. How much are we going to risk maximum? We'd like to have a down pivot here so that way we can limit our risk. Generally, an up bar is enough to kind of take me out, like right there. But I figure I'll put my stop above all of the lines to give it a chance. And then now you can see my smaller charts kind of changed on me a little bit. So I've got fibs here. There's a little bit of trouble. If I make divergence, I'll get out. And ultimately, I took the first one a little early because there's a whole heap load of trouble here. So again, this was the entry spot, and I think it was a good one. There's higher divergence. So anyway, I think it was a really good spot. Again, a really good example of, putting your stop where the market should not go. Sometimes I go there anyway, but we gave ourselves a chance and we made about $600 on it. So it's not bad. Again, respecting the rules of, well, and we got more action headed our way. Again, what do you think about it? We got mid bands, we got fibs, we got one to ones. It looks like a pretty decent opportunity. I know we've got pivot stop outs coming, but this is where, again, reduce risk and reduce risk. And now it's reducing on its own. And look, divergence from fibs. So again, that's the max risk we're going to take on this thing. Multiple divergences. Again, what do you got? I mean, you guys tell me. I think that the small chart lined up really well with that short trade. Cam, the answer is yes. Is that Adriana? As you add my template, let me see what you're getting. No, you're opening the template. You're not saving the template. So you have to save the template to your Documents, NinjaTrader 8 folder, then go to Templates, then go to Strategy, and then go inside of the Trend Trade Strategy folder, and then you save it in there. So, let's see. I don't think they allow zip files anymore in here, but I'll try to put it in here. I don't know if it may not let you download it, but anyway, this is the spot where you put the template. And then ultimately what you have to do to apply the template, and you can say, look, fibs, pivot, stop out, that's just such an awesome bottom right there. So we're still a ways away from automated system signals at the moment, but I sure do love the potential of a bottom here. Adriana, if you have any trouble, just get with tech support. Jason will help you out. He'll get it squared away for you. Now, my guess is we're going up. I don't want to guess, but again, maybe a discretionary trade for me, but again, I'm going to try to keep it all system signals today. All right. Looks like the AI is trying to answer your question based on information. Yeah. So anyway, short version is the answer is yes. You can change any of the inputs that you wish. All the inputs are listed on the user guide, and there's a video obviously for this as well. Come on, slow internet. So as you go into the NinjaTrader 8 indicators and you go into the trend trade strategy, again, high power, trade management for the trade system. Everything I'm talking about today and showing you guys in class is also in this video, so it's a really good video. And then ultimately you can, go through each of the inputs individually and see what they're all about. I'm not going to do that here, but Cam, working on automated pivot stop outs. As far as a pivot stop out on the large chart, that means that'll make divergence true. I don't use divergence as a precursor for system trading on my setting. And the reason why is I want to have as many opportunities as possible to take a trade as long as the small chart agrees. Does that make sense? Hopefully it makes sense. So as long as the small chart says, hey, let's do it, I want to take the trade. If the small chart says, hey, let's don't do it, then, I don't want to take the trade. And, again, a lot of times you're just going to have to practice this. I know the NASDAQ is fast for a lot of people. With the auto, there's a lot of work that has been done on, and I really like double divergence bottom. This is where I sure do love a momentum trade. I won't do it because we're not doing momentum trades, but I sure do love a momentum trade after that bottom. You see that momentum trade? Perfect. Anyway, not anyway. That's a whole nother ball of wax. I know Mark went through a little bit of momentum talk with you guys earlier, but after that bottom, momentum the crap out of that thing. Anyway, all right. I got sidetracked. You can see what I'm talking about, right? When you do a momentum trade, depending on the bottom and the strength, it's pretty easy. You should keep going, realistically, but we'll see what happens. So as far as our system trade, and again, look how, I think it's vitally important for you guys to have opportunities. For those of you guys who are new to Nexgen, you really don't understand like a true super belief, like I love my children type of strength. You don't really understand the power of our software and what it will do for you and the benefits that it gives you. But the more time you spend with it, you'll realize that it does everything you need. All right. What do you guys think about this system trade? So we're going to probably have divergence from resistance if we're going to get a fill, which I doubt we even get a fill. But so do we want to wait for a reversal bar? Do we want to turn that down in my ear? It's yelling at me. So do we want to let it happen? That's the question. Again, I think it's a good spot. I think I'm going to have to pull it up just a little bit if I'm going to get a fill. This is another situation where you have divergence from a fib, but if you look at the triggers, it's not going to stop the market. I mean, there's very little chance it's going to stop the market. Missed us. Anyway, I wanted it to get down a little bit closer. I guess I got greedy on that one with a good bottom, lots of momentum. I probably could have paid a little more, but anyway, no big deal. There will be more coming. All right, now I'm going to delete it because, again, we're very close to, and now we've hit termination, so it would cancel the order anyway. This is just an unfortunate one where we're ready to go, and I think, again, you guys tell me, but the look is absolutely perfect on the small chart right here to go long. And it should have gotten there. I mean, realistically, with divergence, it should have gotten down to the prior low. Anyway, it would have been easy money, just no fill. Anyway, that's okay. Everybody understand the look and what the system did and why the system did what it did. Everything was going up. We had a tail. All the rules were true. And lo and behold, no fill because, it's live in front of God and everybody, and they want to make me look bad. That's the NASDAQ. It's okay. There will be more. If you don't like what the NASDAQ is doing, wait 10 minutes. It'll change. I promise. All right. So look, my next adventure. Let's see if we can get past all this stuff. We'll have to do another one. All right. All right. So look at where we're at as far as an entry here. I just wanted to turn it on. If we get back below fibs and a pivot stop out, do we really want to go long? I don't think so. Now, if we get back to the edge here, we may want to. We're probably not going to get a fill, like I said. So, again, this is another situation where divergence from one-to-ones is going to make me cancel the order. So let's just watch. I'll put a box in where the order might have been. And then, is there enough room to what we're looking at up here to make it worthwhile? That's the question. What do you guys think? Let's have a vote. If we get down into this zone where it wanted to go long, what do you guys think? Take it, don't take it, wait for a reversal bar. What's your thought? No? Okay. Again, these are the decisions you guys are going to have to make in real time. And, again, you can see how the small triggers are getting below all the other triggers. Usually with that much strength, you go back up there one more time, usually. So we'll see. If, here's my thought on it. I'll give you my thought. If we stop right here and we make a reversal bar up that's above the triggers and we haven't exceeded the down bar marker, we may take one shot at it. So one shot would look like this. I'd put a buy stop right there. And if there's no up bar, I won't get a trade. If there is an up bar, then, and again, for me, the cutoff is going to be if we take out this 34.5 reversal bar marker. If we take it out, I'm not going to want to do it anymore. But you can see how they're hesitating here. So, again, it may be limited as far as how far it's going to go. Where the hell is my... And it's okay to reduce your risk quickly on one that might be limited. If we get a lower divergence, you're going to have to get out. So hopefully that doesn't happen. All right. And break even plus. We'll see where it goes. Usually that's it. 1-to-1's just past the fib. You can almost bet that's the end. I'll give it two shakes just in case it wants to go crazy. But anyway, all right. Does everybody understand what I did there? Yes, you could have gone long, with a limit with the system right around there. But because we were close, and again, I damn sure wouldn't do it again. You guys see the system signal here? I don't care if it wins or not. I'm not going long here after I just hit pivot stop out with divergence at fibs and everything else. Financial suicide right there. So I'm not taking the system signal. Everybody understand that? Give me a little Y in the room. Yes, I'll take it here if I get confirmation. Take my money at the areas like we normally do. Nothing has changed. And you can see, look, the large chart is spitting out signals because the rules are true. All right, so everything's up and we pulled back to the EMA and all that, but it just doesn't know what happened over here yet. My version 2, when my programmer shows his face again, version 2 will incorporate small chart management first, and then potentially small chart filters as far as when not to trade. I mean, you can see there's a long way to go and lots of things to do to make it better. It's a really good start. I mean, I never was going to automate a trading system around our trend trades and all that because I couldn't or didn't have a programmer with the ability to do all of the dynamic things that we love to do, right? Termination conditions, reading fibs off the chart, how many triggers are breaking through fibs in order to continue to do trades. Again, even if you did this trade right now, you'd be going, oh my God, I hope it keeps going. I'm going to have to manage my trade right here because lower divergence is going to make it go ripping to the downside, which, case in point. Anyway, that would have just been gambling right there. I don't know about you guys, but I love to gamble, don't get me wrong, just not with the trend trades. Owners of the strategy, yes, get lifetime updates. I do want you guys to know there will be no more owners of the strategy after hopefully this week. I'm hoping by Friday or Saturday we've got the ability to do the lease version, which will also allow us to do the demo version. But if you guys want the lifetime version, I promise you, this will be your last week. We won't do lifetimes anymore. And look, I'm going to charge $2,000 a month to lease it. I'm just going to tell you right now. So that is a shit ton of money. That's $24,000 a year to lease it. But if you can make 6 or 7 grand a day every day, then it's worth it, right? I think. You guys tell me. It's up to you, but I'm 100% convinced everybody's going to pay $2,000 a month. So, I would much rather have that than the lifetime ownership, but I do want to give all of our owners and people with our software the opportunity. But the opportunity is coming to an end very, very quickly. I may even, I've already done the first round of testing on the new stuff as far as leasing and demo. And look, if you demo it for a couple weeks and you see that you can make a ton of money with it, it's going to be worth it. So anyway, last chance probably this week. I don't want to put, I'm not into super heavy sales pressure and stuff like that, but I also really want to get to a recurring residual business. I'm just telling you my business model. So I want to go recurring business and, $2,000 a month for a strategy that makes money every day is going to be worth it. That'll be the base of it. All right. So what do you guys think? Short trade? Yay or nay? Look at what we got coming. Divergence from 1-to-1s before we go short. So I'm not going to go short right here. It's a good look for it, but I'm not going to do it because of divergence from 1-to-1s. We'll see if we get a down bar, or maybe we go up to the next level. I'm okay going short. I want it to kind of tip its hand just a little bit before going short. We don't have a really good top over here, so it makes me suspicious. And you can see what we did. There's my down bar. So the question is, do I want to take it with a super teeny tiny stop? Because that's basically what you're looking at. It's probably going to lose, but I'll give it a teeny tiny little stop and just see if maybe we can get back down there. And then I'll get to break even really quick because, again, it's very iffy. So I'm not really wanting to risk much on this. I'll leave it above the high pivot, but it's probably going to get it. Anyway, do you guys see what I did? I waited for the down bar, and I knew it was going to bounce, so I wanted to get a little better limit order. So I'm literally risking 1.5 points. And, again, look, you could take quick profit at a 1-to-1 if you want to. And just say, I don't have to get a lot of money. I don't think it's going to go down, but, thinking and not thinking, those are bad words with trading, right? So I got my stop above the pivot. I'll take a quick profit on 3 just since there's trouble in the way if I even get it. I don't think I'm going to get it, but we'll see. All right. It was worth 1.5 points. If it did go down, let's just say it went down from fib to fib, it's worth 1.5 points. To me, anyway. Again, you guys have to decide what's really going to work for you. But look, we were already warned at the bottom. You guys see that? This is the point that I really want you guys to get. We were warned right down here that, again, maybe it's not going to go. And look, I said if it gives a down bar, I'll take a shot, but with the small triggers up, you're going to get a pullback. So I got a really low risk in there. And anyway, I would imagine we're going to continue to the upside and go finish whatever move they wanted to do the first time, which is totally cool with me. I don't care. I'd rather see more ups because there's a lot of room on the big chart. And we didn't really satisfy, areas on the big chart. So I think there's a lot more potential to the upside than I do the downside. But anyway, RMR is king. What is risk management? I don't know what RMR means. Hmm. All right. So look, here's the system signal. Look at what's happening above the system signal. A pivot stop out with divergence at. So do we want to take it? Do we want to take it on an up bar? Do we want to take it at a lower spot? Do we not want to take it at all? Because this is the spot right here for the trend trade. So what do you guys think? Do we want to take it here or not? Recurring monthly revenue. Okay. All right. Sorry. I'm down on my acronyms. All right. So there's an up bar, but it's right into resistance, which is pretty crappy. And it's into the small triggers that's down. That's pretty crappy. So, the system is on board for a long, but I'll go at the edge of my triggers right here. And then, look, now I've got minimal risk. And if we get a second down divergence, they're going to run me out of this thing. So you see that? So I'm in it, but now I got very little risk. I don't think we're going to make it through a fib, but there's down divergence. So I should be out. It's so close, I don't want to try to move my stop and mess it up. I'll just let it be. Uh-oh, I forgot about that. Anyway, very minimal risk. I mean, $100 here or there. Did I want to stay in it? No, not really. Not with divergence. And again, I still think they're going up. But we got to work our way through some trouble. We can take a little momentum trade through here if we get it. We'll see. Otherwise, they're just struggling a little bit. Look, we'll call this our trend trade spot. And then we'll see if they give us another opportunity. Usually they'll come down into this spot, maybe make a pivot stop out, maybe come a little further, and then we'll see. But a lot of trouble. I probably should have went to break even when we hit fibs instead of losing a few ticks, but I wanted it to force me out instead of me taking myself out, if you know what I mean. All right. Still think we're going up. I think you'll look back on this signal and go, damn, that was good. I just think they're working it out over here. All right. So when do we want to take a shot? That's the question. Again, it's like I said, it's probably going to look like a momentum trade. Above this 1-to-1 will be our second chance, is my guess. So we'll see if we rip through there and our triggers get up through there, and then maybe we'll take one more shot at the continuation from a little pullback to the 1-to-1. See how we got through it? So now we're free and clear. Now we're just hoping that they come back and tap us so we can get into some of it. Come on. That's rude. I'm going to pay a little extra just because I can. I didn't have to, but. All right, momentum trade. It shouldn't go much further. Man, I don't want it to go down much further with divergence. I got to get the hell out if it's not going. I want to give it half a second just to see. And then we'll see what we got. All right. Everybody okay with this? Again, look, we're using that system signal, and the system signal basically took us out. So, the system signal took us out. We could take some money off at one-to-ones if we really wanted to. And then now we'll let the second one marinate until, what do you think, fibs or fibs of one-to-ones? I guess I could have waited a second, but I want to make sure that you guys understand what I'm doing. Our system signal was here. They kind of forced us out. But like I said, it's probably still going to go up. So we waited for it to break above everything, which was right here. And then that's our continuation. Small triggers above our large. We get the opportunity to make a little bit of money. And now we're waiting to see just how much money we're going to get for our effort. All right, Master B, love the trade, S&P trade. Let's see what you did. Everything's going up. Bought a pullback, making money. Pretty easy look. Very nicely done. Love it. And that's a quick bingo. I guess I took my first ones a little prematurely, but you guys got me nervous. Kidding. Everybody understand it? 2 shots at the same trade. So, again, if you left a 60 tick stop in there and hope for the best, you're going to, you would have won anyway. But if you managed it with the small chart, you basically got out, then got back in again, and it still did what it was supposed to do, which was make it up to the fibs. So now that we've made it up here and we've got divergence from one-to-ones and fibs and one-to-ones over here, we're not going to allow the system to take any more trend trade longs for the moment. All right. Mark, you were long. Cool. There you go. Awesome. And again, you can see the continuation. It's really easy to see. Small triggers get above everything. You bought the area, got out. It's a beautiful thing. Nicely done, Mr. Novak. Anyway, look, what I'm doing is not very difficult, is it? I mean, you guys tell me if it looks difficult to you. Just reading the small chart and saying, should I or shouldn't I? Following a couple of really simple rules. And, look, we're not even being tricky about it, guys. Look, all the trade management rules are already written out for you. They've been written out for a decade. More than that, but this version. So, again, you've got all the rules that you need. Just, again, it would be nice to have them automated, and I'm going to work on that as soon as my programmer gets done horsing around, drinking pina coladas or running for his life or whatever the hell he's doing. Anyway, not getting impulsive. Look, here's the other thing that the system will do for you. Instead of trying to take all 97 trades that you think you saw, it'll really wait for all the large chart rules to be true. Let's see, where is it going to try to get in? We got 4 triggers past everything, so There's a chance it may try to go long again here, which would be okay with me. We'll see what it says. Anyway, the system will make you patient. I don't know. You guys give me feedback. You guys have had this. Those of you guys who've had the system for a while, and if you've applied it properly and waited for the signals, hopefully you'll attest to the fact that it will make you more patient, make you more confident in what you're doing. It will also remove what you said, Master B, is that impulsivity. All right, so look, we got a trade. We're from, the question is, do we want to do it from a mid band and 1-to-1? Or do we want, if we get too many divergences, do we want to wait until lower prices? We may not even get this, but that's awesome, Brian. And again, it's just like having me or Mark helping you basically on the side. This one's getting to be in the iffy zone where it's going to be below the triggers. So I'm not sure if we're going to even see a trade here or not. Still got a little ways to go, obviously. So let's see where it wants to put it. I still think, 1-to-1s and fibs, if I'm going to take a shot. Now, look, max risk, guys. For me, they're really hopping around here. Max risk for me, do you guys see where I did with this? They're going to come down there. Too many divergences. But look, if you're going to take a trend trade, for me, look, if we get past this area, realistically, probably should have my stop up a little bit higher. So I was only risking a few points. But worst case scenario, if they start making down bars on the big chart, and that's why I have this on here, that's going to be a max risk. So it worked out to be 5, almost call it 6 points. But that's much better than the 60 tick alternative, which, usually if it keeps going through that, it's going to keep going. So, again, I was kind of pushing my luck below the triggers. And, again, I'm kind of a fan of mid bands and 1-to-1s, and I don't mind taking a small chance there. But now we're done. We got divergence on the big chart, multiple divergences here. Both of my triggers have rolled over. So where we're thinking about that system long, we'll probably end up with a short, but can't go short yet. So large short says no, no, no. Anyway, minimizing your losses is really the key to what we're doing here today. Obviously, we could have maximized a little bit more of our profit, but again, looking at our large chart, there's no real good reason to go short. It may make it to the mid band and 1-to-1s here, but small chart says let's go short at 92. Large chart says don't do it. It doesn't fit the rules. Which means, again, this is another really good example of automated strategy forcing you to be patient and wait for everything to really line up. 10 days. 10 days, and obviously I've got synthetic fibs on there and mid bands and reversal bar markers and stuff like that. So the system doesn't run with tick replay data enabled. You can't have it. So it just won't run. And like I said, small chart says down, large chart doesn't have the rules met. If we go further beyond this, we got support here with divergence, which is a warning sign. We're going to probably get back up here. We've got one-to-ones with a mid-band, so they're going to bounce probably up to this area right here pretty easily. You can see that, right? And then whatever happens at 92, 92.50 will probably determine what happens next. You're talking about on Ninja Trader. I technically on my 15-minute chart, I like to have it 90 days back. There's not enough bars to do the fibs and all the good stuff that we do. So 30 days back on my 1-minute chart and 90 days back on my. But you'll find when you're not synthetically building bars, it only takes a second for it to run, even at 90 days back. If you built a Renko, like a 13.2 NASDAQ Renko 90 days back, you would be some kind of sorry waiting for that thing to calculate. Um, with the system trading stuff, I mean, you know me, I am a super, 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 super giant fan of the market flow. Um, so you'll never hear me say don't use the market flow. If you are very proficient in market flow use, don't get rid of it. I love it. As far as automated trading systems and incorporating the small chart, 100% not necessary. So, all right. So now we've got what? We've got higher divergence. We got to break through this area right here if we're going to see a system trade to the downside. Oops, wrong button. You see what I'm saying? We've got one-to-ones, fibs. If that area breaks, which it may, we may start seeing some system trades. If it doesn't break, then we're not going to touch it. We're going to start being choppy in this range. You can start to see a bit of a choppy range building, which is totally fine. The system won't do any trades in a choppy range 9 out of 10 times. All right, Bruce, in the strategy input area for max entries, I didn't suggest 5. I said I use 5. There's a difference. There's no such thing as different settings, Bruce. Whatever ATM you have in your strategy is what it uses. So it has no clue what the chart trader says. So that's a really good question. So whatever ATM is in your strategy where it says ATM, that's what it's going to use. Whatever's on your chart trader, it doesn't use it at all. Adam, have you watched? I've got 2 charts, 2 videos on the downloads page. Bear with me a second. So on this page right here, Rakesh, you can do whatever the hell you want. It's America, baby. Now, if your prop firm says don't do it, then you probably shouldn't. But, who am I to say? It's just like with our prop firm. I put in there specifically that if somebody has an automated system for TradingView and it works and makes money every day, let's trade it. Trade the crap out of it. Some prop firms do not allow it, but how the hell are they going to know? I mean, let's just say, for example, you're doing trend trades and trend trades only. And a prop firm says, hey, send me a copy of your trading plan. Well, call me crazy, but I'm pretty sure this is your trading plan, right? So, again, I don't advocate anybody breaking rules, but there's no limitation as far as the strategy goes. How's that? It doesn't run on NinjaTrader, Rakesh. It runs on TradingView. So this strategy is not written for TradingView. It's written for NinjaTrader. TradingView is awesome. I love TradingView. If you said I can only have TradingView for the rest of my life, I would still be totally happy. I use it for a lot of things, crypto, and anyway. As far as automated strategy coding, you really need the C# power that NinjaTrader coding provides. If you're going to have, again, when we talk about the rules, all of these rules down here, you can't code. I mean, you probably could, but at some point you're going to run out of juice on TradingView, where you've got a lot more power on NinjaTrader. And then as we add in these smaller chart time frames and we add in small chart management, it's going to take even more juice. So it's just something that can't be done in TradingView the same way. Not only that, they don't have dynamic wrinkle bars in TradingView. So anyway, like I said, we're probably in a range for a minute until they decide to break out. So pretty easy to see we're going to be in a range. So we'll see. Is it going to break out to the upside or is it going to break out to the downside? I'd prefer breakout to the downside personally, but again, wish in one hand, spit in the other, right? So, but since the large triggers are already down and things are really close to the mid band, I think the rules will be quicker met if we go down. But if we break out to the upside, we'll just have to wait until the rules are true. So anyway, I don't care either way. Makes no difference. On the large chart, Jerry, I'm using, as far as chart template, I know this is going to sound crazy, but the trend trade system template. On the smaller chart, I'm using the trend trade system chart template with a 34.5 reversal bar marker that also plots a 34.5 midband. I have these templates on the download section that I just posted just above. So you guys are more than welcome to go into the downloads, and I've got my 13.2 template on here, system templates. Not only that, we've also got a video description of my current template and why I do everything. We also have managing on the small chart video. And then this is the one that answers the question, the running market replay with or without management. I'm going to get back to whose question that was. Adam, watch that video I just posted. That's the answer to your question. What's the winning percentage? The answer is yes. It's not the answer you want, but I want you to keep in mind this is why it was so difficult and why I was never going to do our automated trading system going forward. It's not a back test system. You can't just go, oh, let me run it on, 6 months worth of data and give me the stats. It just doesn't work that way. Our software is dynamic. Our software goes forward on the chart. Your trading and your live money goes forward on the chart, right? You really honestly don't have anything except the right edge of your chart. So since you don't have anything other than the right edge of your chart, that's the only thing that the system sees is what's happening immediately right now, period. It doesn't see history. It doesn't know about anything back over here. It's only saying, are my rules true right now on the right edge of the chart? And I want you to think about the nature of our Fibonacci software. So, our Fibonacci software is using 10 days worth of history to plot all the fib lines. Well, if you go back and you said, okay, let me run a back test over 10 days, well, the first day of your back test only has 1 day of fibs, 1 day of data for your fibs. So that's not what you would see in real life. So in order to see, something similar to what you would see in real life, and I think you guys can attest to this, going market replay does not perfectly mimic what happens in the market. It's a very close approximation, but it's not perfect. It's also a different data set, believe it or not. So this is CQG data, and that if you're trading a real account on NinjaTrader, and the data on replay is from DTNIQ. If you guys didn't know that, anyway, it's just a different data provider. So there are slight discrepancies in there. So even if you download historical replay, it's going to be close, but not perfect. Anyway, that doesn't matter. You're never going to make money in history. You can't go back and fill out the lotto numbers from last month and say, oh, I won. They're not going to let you do it. Guess what? They're not going to do that in the market either. If you can't trade what's happening right here, right now, on the right edge of the chart, you're not going to make money live. So again, this is the thing that the system does a really good job of, is what's happening live right here, right now. Obviously, we got a lower divergence. So we'll see. We still got to get through this pesky fib that's in our way, but once we break this, I would anticipate that we'll start seeing short trades. Yeah, again, it's frustrating because all the sheep have been trained that I got to see some historical performance or it's not real, which is bullshit. This is why when I get the demo version done, and you guys can run it for a couple weeks who still don't believe, as you watch it live and you learn to use it live, you'll end up wanting to pay for it. I feel comfortable with that. So it's taken a little more than I anticipated to get this damn thing to a state where we can lease it and do demos of it, but I had to rewrite everything. All my DLLs, all the distribution software, it's really become quite a pain, but it will be worth it. Anyway, sorry, it's too much information. So here is the question I have for you. What are we waiting on? It's one simple phrase that is going to be true at all times. We're waiting on all of the rules to be true. Period. And you can see, now we're in a position where the system will go short if they're just rude sometimes, aren't they, on the NASDAQ? All right, what do you guys think about this? One more short trade from the mid-band, and watch. Now, this is my maximum risk. I'm going to let it go, but I'm going to have a max risk on it of a reversal bar marker because I'm not liking what we're trading into. Too many supports. So I really don't like this one at all. Anyway, I was hoping we could at least run down here and retest and, get a small winner out of it. But you can see, divergence, it's fun. I don't mind risking a few points. So do you guys understand what I did there? Look, that's the whole risk. So I'm risking that to at least make this and maybe this. It just, and the reason it took a trade is because we had 4 triggers through the fib. So, yeah, granted, they were a little bit weak, but anyway, it didn't go. It's okay. You guys can see, look, and I'm super happy that we're taking a couple losers. They're just a couple $100 at a time. So the winners we're going to let run and we're going to get big money out of them. And then the losers, very small when you manage with the small chart. And that's the whole point of this lesson today, to be able to see it. You know what, Brian? You got to turn that around and say, my your rule. You can change the recording. By the way, did you know that? I don't know if you knew that or not, but you can say rules met and have a hot chick that does it. Rules met, and then you're like, wow, the rules are met, and the hot chick said it. You'll feel better. Hey, to each his own. You know, I'm not gonna throw the. I've already said too much. All right, so look, we broke out. We're gonna probably get a momentum trade long here. You guys want to take one just for fun, grins and giggles? Momentum trade long. As long as we don't lose momentum, we'll stay in it. It's getting sticky. Oh, we lost momentum. Shoot. Anyway, I'm just bored now, waiting for something to happen. So that's a good momentum trade. I love the trade. It just didn't follow through. Yes, that's manual trading. So sorry, not system trading. Thanks for pointing that out. Anyway, I like the bottom. We went past the fibs a little bit and probably have a trend trade here, which the system's not going to pick up because the rules aren't quite true yet. So usually if you have a momentum trade fail, you get a trend trade right behind it. It's usually the case. I'm going to wait for the system to generate some signals for us. So we got to have rules met. What's rules met? Well, we need to have our our EMA and our large triggers above the midband, not below the midband. So that's what we're waiting on. It may go anyway, but. All right, Tony, let's see what you got. All right, you were going short with everything going down. Cool. You obviously have some different system settings than me. So let's analyze your trade here. So you have different system settings that will allow you to go before the triggers are below the midband. That's why I didn't get one. And let's look at your small chart. Small chart had triggers down, 1-to-1s, fibs, everything in your favor. So that was awesome. And then everything was still below, and you were able to hang on for a bunch of money on that one. Good. Awesome. And again, do you guys see this? It's somebody with a different system setting than me. He's done the work, he's put in his own time. And again, I think that the small chart agreed with what you were trying to do is basically momentum looks, where there was a trend trade look here. So anyway, I think it's a great job of doing that one. Again, it's a little bit of a different setting than I had. So, he had a short right there, but totally cool with that. Awesome. And again, were you thinking, Tony, system trade plus small chart degrees? You put those two things together, you're winning, let's just say 70% of the time. And then when you do lose and you manage on the small chart, all the losers are very small. I have found, minimal losers. Very, very rarely do you get just waylaid and run over, hard as hell. It just almost doesn't happen. That was all auto. Cool. A nice testament to somebody with different settings and allowing it to run. Cool, cool. All right, we're kind of stuck here at the moment, guys. So I've tried to give as many lessons squeezed into this as I possibly could. Is there anything that you guys would like to go through or like me to cover? Here's our trend trade. Kind of look trend trade. I guess it's basically trend trade. Once you get, look, divergence ends trends and then divergence starts trends again. So my guess is we're going up. Just, I'm not doing another one without the system. Just, I'm trying to give you guys more system trades. I got a little board over here, which love the trade. My exit was a little off, but is there a place in Discord where traders are sharing their settings? Yeah, I mean, the traders chat is where everybody shares all their info, or they're supposed to anyway. Look, here's the thing, Cam. Why on God's green earth would you need somebody to share info with you if you're doing your own work? Think about what you're asking. I need somebody else to help me out because I'm not doing my own work, is what you're saying. So, I've basically covered every setting and every rule and everything that we can do with the system. Man, I want to go long. I'm not. One of my favorite second entries is, the reason that we get out of short trades, second higher divergence. I love using that as an entry if the reasons are still true on the big chart to go. Anyway, sometimes I lose, but I like it as a secondary entry. Anyway, waiting on my system. Again, you guys can see the patience that it forces you into, at least with my settings. We gotta get going a little further. Sometimes I miss them, and that's okay too. So, when you say it doesn't give you arrows or trades, Adriana, one of the crappy things about NinjaTrader is sometimes it will change if you, like my machine ID has changed because I built basically a new computer. So it goes in and reads pieces of your computer to generate this machine ID. And if it shouldn't even generate a grid, but if it's generating a grid, it should generate trades. The reason it generally won't generate trades, there's two reasons. The number one first reason is you don't have an ATM strategy active. That's the number one reason that makes people not get trades. So, are you sure your ATM strategy is active in there? And then the second thing would be to double check your machine ID with Jason just to make sure. Shouldn't even generate a grid though if your machine ID is wrong. But we have tech support and Jason will do a fantastic job of taking care of it. NinjaTrader did change your ID. He fixed it yesterday. I don't think he fixed your machine ID because I have to do that and I was golfing yesterday. So I don't remember that happening. All right, guys. System is trying to go long. What do you guys think? we're going to have to pay a hell of a lot more than this if we're going to go long, right? I mean, it's going to end up being one to ones or mid band and fibs and one to ones. Would you guys agree with that? I mean, we're just going to have to pay more if we're going to get into this thing. Now, not a guarantee of a win, but I'm a fan of the one to ones, and usually they do a really good job of helping with the assist on. Obviously, we got a lot of fibs and things going on here that. So, probably should take some of them at the first fibs here. Everybody cool with this system trade? I can't guarantee it's going to win, but I sure do like the look. Amika, let's see what you got. I'm not sure what this is saying to me. You went short and you got out. Is that what you're saying there? I'm hoping. Looks like it. And again, look, guys, I gave this room still because I don't want to put my stop behind a pivot when I got fibs and everything right there that could really, still make the thing go up. So now I'm more than happy to, and again, there's my first fib area. I could take some money there and then, probably still keep going. But I think you guys get the idea, right? What do you think? Put on that one. Everybody okay with this? This is a really, 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 really ultra supportive small chart look with the strategy. Now you literally can't get better than that, in my opinion. I mean, it's perfect. So I went a little early because, one to ones tend to do things. And then I didn't put my stop below the pivot because I have a fib right there helping me out. So, this is where generally I'll add on double. I'll do one there and add some more on if I have to, and end up trying to get paid twice for the same, get paid twice as much when they're perfect. But anyway, you can see we hit a fib. The triggers are so strong. I'm still thinking we make it to the second one up here. We got new pivots, so I can lock in a little bit. Are you guys having fun? I'm having fun. I mean, again, I'm not getting, you know, there's a couple of little, I got bored once, so, I did a momentum trade that didn't go. So I got bored once, and then, we didn't get filled on a couple, and maybe got out a little early on some just because we're teaching. But anyway, hopefully, pretty easy look. Yeah. And look, I don't care about what I miss, guys. I care about what I get, if that makes sense. Hopefully, that makes sense. I don't care about what I miss. I miss 90% or 98% of what happens in the day. I really don't care. So it's a hard mindset to get your mind wrapped around where you're like, I don't care what I missed. It's no big deal. The FOMO, I don't care. I just want to know what am I going to get, not what am I going to miss. That's a good question. 30 minutes, David, on the trend trade template. It might be 2 hours over here. That's maybe we might have some discrepancy. Yeah, it's 2 hours over here. I haven't even thought about changing it. We've used this 2 hour update for so many freaking for a decade that I'm just not changing it over here on my small chart. I'm very happy with my small chart. My small chart doesn't lie most of the time. So I'm not changing a damn thing on that. I did it on the system because people wanted to see, more quicker fib updates. But anyway, it doesn't matter what you do. It's not wrong. It's just different. Are you saying do all the work myself with the strategy and not what works for other traders? Yeah, that's exactly what I'm saying, Cam. Because you may not have the intestinal fortitude, is how I'm going to G version it, that somebody else has. You may not have the experience that somebody else has. How are you going to get it? I'm not saying, I've already given you the settings. So they're coming, straight from the boss. So I've given you the settings. I've told you how to use it. Don't worry about what other people do unless somebody else is paying your bills, and then, you got to listen to what they say. But I have found that most traders who worry about what other people do are perennial losers because they're always worried about what they missed and who's got what. And some, it's, I hate to say it that way, but it's cold hard truth. The people who do their own work, make their own pictures, do their own analysis, do their own rules, those are the guys that win. Guys and gals, not just guys, people. And the ones that don't, always struggling and looking for something better. Anyway, I don't mean to be put into preachy mode. All right, so obviously we hit a trend line. Do you guys, you guys have seen me do this in the other room a lot, right? I'm going to automate this in a subsequent version of our software, but I love when you have a large chart, lower divergence. Generally, um, when you put a parallel trend line on the low pivot, you break out of it, it keeps going, you get back in it, it keeps going, and usually it serves as pretty darn good targets too. So if they don't break it, we're going to end up going back down here. That's usually what happens. So you can see somebody else sees it too. So we'll see what happens. I wouldn't count on a big breakout to the upside just yet until we break above 96, 97, and then we may keep on going. You can see they're in battle mode now, right? Somebody's loading up for something. This is where, that picture my brother shows you, the large short traders or the large traders? The large traders are probably loading up shorts 9 ways to Sunday. And the smaller traders who are seeing things going up or buying pullbacks because they don't know it's a top yet. Anyway, we'll see. Time will tell. For me, life is simple. I just wait until there's another arrow. And if the small chart agrees, I do it. That's just too damn easy. Anyway, like I said, the large chart traders are probably loading up shorts. And, again, I love, love, love the whole lower divergence parallel trendline channel thing. It's awesome. Love it. Anyway, so if you see my charts with it on there, you know what it is now. As a discretionary trader, you see your momentum trade after that top held. All right. Man. All right, what do you guys think? I hate that it hit my trend line. I'm just going to say that out loud, but what do you guys think about the small chart and the trend trade look? Do you like it? Eh, dang it. All right, we're going to have to pay extra for this, it looks like. I just hate doing it right into my trend line, but we're going to pretend that trend line in there. That's what I wanted. All right, I'll pay a little extra. See how it hit my trend line down here at the bottom? It always makes me nervous because those trend lines are so powerful, but the small chart is too perfect, so I got to do it. And then we can manage our trade a little tighter. I really got to put my stop above triggers. All right, Amika, let me see what you got. Oops, that turned out big. What you got there? So you went long and then you got out. So what were the rules you used for that? Out of curiosity, just buy the mid band and what got you out? That's just what I'm curious of. Anyway, all right, man, those darn trend lines. Unless you use those trend lines, I did. That's why I still took the trade anyway because I think it was the fair thing to do. I probably would have thought twice about it, but anyway, I can't say don't do it because of a trend line because haven't taught you guys that yet. Now, notice that we waited for a better entry spot, and then, again, look, we didn't have to risk 60 ticks on the damn thing. So, this is where the people who are using the automated strategy and hoping for the best really run into a lot of trouble. All right. Now, we've run into our trend line again at a fib. Guess what's going to happen, guys? That's going to end up being the short. Anyway, maybe. We'll see. We'll see if we get a continuation trade, which would, again, they'd have to hold resistance and then they'd have to get below here and then we'll do it again. If not, then we will just wait it out. This is a picture of perfect trades sometimes just don't work. Because look, again, remember what I said, you only get paid for what you do on the right edge of a chart. So I think everybody can agree, and maybe you won't, but maybe I think you should. Coming off of fibs up here with lots of divergences. Again, I think your first momentum trade was right here, which would have made you a bunch of money. But I think as you set this up, if you were going into Mark's class and you were looking at the market like this, because this is what you have live, that's the perfect look for what we do. A good top, coming off of fibs, triggers are going down, screaming, the small chart's perfect. And, sometimes they're mean, they just don't go. So even perfect trades fail, but, again, I showed you a little trend line trick, but you can't use that. I mean, you can, but realistically, we can't use it in this case. It's just not fair. I don't have any more because I lost that hard drive, but pictures on how to do those trend lines, but it's very, very easy. if you have two lower divergences, so here, let me clean up some of my mess. So since we're in here, when you go back and look at this, you're going to absolutely shit. You're going to be like, damn, that's good. So look, two lower trend lines, and you use array, which is, F3. You may not know that, but F3 is a array. And that'll extend to the right. And then all you got to do on the two lower divergences is copy paste the line and stick it on the pivot between the two divergences. You got that, Master B? And then until you have two new higher or lower divergences, it will really play out for quite some time. And you can see, I mean, we basically hit the lower trend line and we basically have hit the upper trend line, and that, they bounce down. And again, look, once you get 1, 2, 3, 4, 5, these things, the more they get hit, the more they tend to hold. So unless we get a good break out of this, we're not really going up. So yes, would I take an assertive trade coming off of that? Hell yeah, I would. Would I maybe not take a trend trade or wait for confirmation after that? Yes, I would, but that's so discretionary. I don't want to add that in. The trend channel is better for that? Yeah. Well, automating it would be easier. So that's on my to-do list. Yeah, that was it. All right. So just waiting on the trend trade system to say something smart and give me another chance. Anybody have questions? Comments? Has this been educational, hopefully? Again, I know we haven't had a super lot of signals to work with, but the ones we've had at least have been helpful, educational. What about 15-minute chart show up? Are you talking about on Trading View or in NinjaTrader 15-minute? I mean, you can see, I mean, it's probably pretty close to the same, but you can see, look, we got the low down here. We've got one-to-ones up here. The small triggers are going up, so we're probably going up. And then, ultimately the next zone to get back to would be 30-30 here. So if we do start going up, we'll see. All right. Our trend trade system is not going to go long because of one reason and one reason only. You see it, right? A pivot stop out. So you have to ask yourself a question. Do you want to go long into a pivot stop out or not? So there are times where I think it's perfectly appropriate to go long into a pivot stop out. The question is this one of those times? I think it is, but I'm not going to do it. We're just going to wait for our system to say something smart, but I think we're going up. I think there's a good chance we continue to go up. Anyway, so like I said, I think we still go up. We're really close to some one-to-ones here, which gives me the heebie-jeebies. I think if you were going to take it into it, that was the spot, not if it gets back there again. I would doubt that that's, well, see how it canceled the trade? Again, look, termination hit, cancel the trade. If the termination breaks by all four triggers, then it'll keep going long. Again, it's not going to trade into a pivot stop out. I still think that was the trade right there, but Ooh, that's quick. All right, now, perfect example of one that you should freaking never take. All right, you see how I just canceled that system signal? This is the mother load of FU, I'm not going to take a trade just because the large chart says up. So we'll see if that saves us money or costs us money, but I'm not doing it. I don't care what it says. Divergence from fibs, no triggers past it, and a 1-to-1. If they go up, they can have it. They earned it. It's all theirs. And they might. And I don't care. Now, if I was long over here, I'd already be flat. That would be the target. So, if the target holds, then you don't want to go long after that. Hopefully you guys see that pretty easily, right? All right, do you guys want to keep going for a while? I need to go talk to the man about a thing for 2 seconds. So I'm going to take a couple minute break. I'll leave it off while I'm gone. If you guys have questions, comments, concerns, things you would love to see me go over, even if it's not system stuff, I don't care. I'll be more than happy. I mean, system stuff gives us chances to talk about it when it gives us chances. So if you guys have other questions, feel free. Otherwise, I'm going to take a couple minute break. I'll be right back. And just to kind of finish things up, in our trend trade strategy, in the Git book, in the documentation, there's a couple things. Number one, make sure you have a high power plan on Windows. Watch this video, super important. Even if you're just doing indicators, you really need to double check this. I also have on this page trade management for the automated system using the small chart. Again, if there's any concepts, obviously we had the video today, but if there's any concepts that you missed, they are all recorded. So they're here under the trend trade strategy. These are the things, this is my blueprint for what's going to happen with the version 2. And then ultimately, make sure that you have tick replay unchecked when you're doing the system. And then, you can change the fib update. Anything that you change in the indicators, the system will read. So if you want to change something, triggers or anything else, you can do so. How to add the strategy to your chart. And then ultimately it gets into, the input meanings. What do each of these things mean and why? And then ultimately, if you have any questions or anything that you guys would like for us to go through or answer specifically, it'll be, we're always here, so just let us know. Otherwise, I'll be in the other room doing the same thing we do all the time, trying to make some money, trying to take trades, posting everything in picture-wise. Hopefully you guys post in a bunch of pictures too and show us what you're doing. Even if you say, hey, what did I do right or wrong? That's okay. Just feel free to use us and abuse us while you have us. Otherwise, I appreciate everybody's time. I appreciate everybody being here, and I'll look forward to seeing you guys again real soon.